Okay, everybody. So today we're going to talk about business structure. Go out there, get some coffee, get some tea, go take your alpha brain because we're about to dig into this thing. My name is JP Garcia. I'm an independent contractor. I've been doing this for a number of years now. And the point of this video is really to explain to you the different types of business structure that are available to you if you're looking to go into independent contracting as well. Honestly, this is one of the most asked questions to me when I first launched my business. I met a lot of people who wanted to do the same thing. And by far, to me, this is the number one question because, they're asking, okay, how did you do it? What did you do? What legal structure did you choose? And I've been hesitant to put out a video on this mainly because I really recommend to people to go, you need to get a CPA and you need to get a lawyer, and they need to recommend the situation, or they need to recommend the structure that is right for you, that is right for your business, your situation, your finances, all of those things. The same thing applies today. You need to get a CPA and you need to get a lawyer to look at your specific situation. All right. That is the theme of the whole video. But at the same time, what I've done is I've gone out and I actually hired somebody to write a point of view for me at a high level of what the differences are between the most common business structures in the United States tax law. And really what I wanted to do today is just explain what that is to you so that you can at least be educated when you engage a CPA and engage a lawyer to do this for you, right? Because your business structure really is more than just a random choice. This has a lot of implications on what you do and what you're able to do. It has implications on your liability and the taxes you pay and the growth opportunities that you have in your business. So there are 4 main types of business structures in the United States. Okay. If you're outside the United States, I'm sorry. This is really right now for US based businesses. If you need somebody to comment on business structures outside of the US, again, even more importantly, go contact your local lawyers, accountants, all of those things. And, they'll really be able to help you out there. If there are a lot of you that are in one certain locale that's not the United States that want me to do a video on how to do this in other countries, let me know in the comments. If there are enough of you, then maybe I'll be able to go and hire somebody from that country or those countries to put forth a point of view for me to be able to educate you, right? But right now, US-based business structures, there are 4 types. There are sole proprietorships, limited liability companies, and there are 2 different corporations. There's the S corporation and there's the C corporation. And we're going to talk about all of those coming forward, but we're going to use the following framework. With each of those, we are going to talk about taxes, liability, the growth opportunities for that vehicle, right? And continuity. So what happens when you want to get out of the business, or if you pass, or those types of things, right? First one is sole proprietorships. This is the most simple business structure to establish because there are no formal requirements, right? Essentially, you just go out there and you start doing business. And a lot of folks start this way. And my recommendation, again, based on the guidance that I was given, is that while this may be the easiest way to start, you don't want to stay in this situation for very long if you start to have a lot of business and you're starting to make that transition to full-time, right? For a number of reasons, we'll get into it. So going off of our framework, taxes. You are taxed on the individual income tax return. So you will be subject to 2 types of taxes here. Your ordinary income taxes, which are the wages and interest you occur, or the wages and interest that you earn during the year at your marginal tax rate, right? You'll also be subject to self-employment taxes, which are the employer and the employee taxes that you usually get in a W-2 income. You still have to pay those, and that will be based on your net income. So that's what a sole proprietorship looks like from a tax perspective. You'll still have to pay your ordinary taxes and you'll have to pay self-employment taxes, okay? From a liability standpoint, and this is one of the main reasons why I think you need to get away from a sole proprietorship as soon as you can. The liability. There is no separation between you and your business. You operate under your own social security number. And that's a problem because if you ever get sued, then again, there's no separation. So the courts could go after your personal assets in a lawsuit. And, if you have, I don't even know what the risk profile is of your business, but if there's even the slightest possibility that somebody could come after my personal assets, I want to protect against that, right? So, but under a sole proprietorship, the liability, there is no separation between you and the business. That's the key thing to remember here. From a growth standpoint, it's difficult with a sole proprietorship because you're not able to bring on any partners, okay? You can't bring on any shareholders either. So if you were looking to grow and expand that business, you would really need to get out of that sole proprietorship and move into one of the other vehicles. Another thing to keep in mind is that sole proprietors generally are not qualified to get business loans. So depending on the nature of your business, you may need to go after those business loans, and a sole proprietorship, it's really not feasible, right? Generally, you're limited to your own personal capital, which is essentially exactly what it sounds. It's what's in your bank account, and any credit that you can get personally through your own social security number. So that's your own personal credit, right? So not a lot of growth possibilities there in the sole proprietorship. So that's one thing to keep in mind here. And the last part of our little framework, continuity. There's really no continuity to speak of in a sole proprietorship, as you as a person are the entire business. So what does that mean? In the event that you die, then the business will cease to exist. So that's sole proprietorships. The next type of business entity, and is the most common for solopreneurs and beginning entrepreneurs, is the limited liability company, right? And there are two types of limited liability companies. There's a single member, which we'll talk about later, and the multi-member, which is essentially a partnership, it's a partnership, right? This is the structure that I recommend to almost everybody, and you'll see why in a moment, right? So from a tax perspective, single member LLCs actually have the option to be taxed as a sole proprietorship or as a corporation. The advantages of which, we'll get into in a second. But again, this is really something for you to take an action to go talk to a CPA about this and what that means for you, right? But suffice to say, the LLC, the limited liability company, has the option. You can choose sole proprietor or you can choose to be taxed as a corporation. If you have partners, you are a multi-member LLC, and you are required to file a partnership return. And that means a lot of things to the accountants and the CPAs of the world. It resonates with me, but again, rather than dig into the technical part of it, I think that the important thing to know is that if you have partners, you will have to file a different return, okay? You will have to file a partnership return, and that is something, again, get a CPA to do that for you, right? Because that's, to me, unless you are a CPA or you've had background in doing that, it's always been my status or my stance to focus on strategically, to focus on what my strengths are and to outsource what my non-strengths are, right? I'm not an accountant, so I let other people do the accounting, right? And in this situation, unless you are going into a partnership to sell accounting, then I think you should probably have a CPA to do this for you and recommend and all that stuff, right? Enough about that. Back to the taxes for a multi-member LLC. When you're in an LLC, you generally don't have to pay self-employment taxes. And also, distributions from the LLC are generally tax-free. I keep giving the caveat. You need to talk to your professionals about this, right? But at a general rule, this is what they are. So taxes, again, just to quickly review, Single member LLCs, you have the option to do taxation as a sole proprietorship or a corporation. Multi-member LLCs, you have to file as a partner. You have to, you'll file your partnership return. No self-employment taxes, and distributions are generally tax-free. So that's good. I think really the most compelling thing between the single member or the sole proprietorship and the LLC is around liability, because an LLC from a liability standpoint creates a separation between your business assets and your personal assets. And that's very important because in the event of a lawsuit, it becomes more difficult for somebody who is suing your company to go after your personal assets. And to me, that's very, very important, right? As a risk mitigation, the last thing you want to do is lose your house because of something that happened in your business. And, you just want to be really careful about that, right? The liability protection is really, to me, the selling point of the LLC, right? But to be able to have that liability protection, you need to keep your books separate. You need to have a business checking account and a personal checking account, and you got to keep those things separate, because the more you commingle, the more you go buy groceries with your business checking account, the more somebody could argue that, hey, this isn't really, even though they're filed as a business, they're really treating this as their own personal, and they could come after you for that, right? So point is, keep your business and personal finances separate, and keep proper bookkeeping in place, and I think you'll be fine. And then you'll be able to really get the most separation protection, the liability protection from the LLC. Growth potential for the LLC, you can add additional partners. That is actually a relatively simple thing to do. And other growth possibilities as far as financing goes, as far as getting money goes, you will be able to get business checking, business lines of credit, loans, all of those things, right, through an LLC. Continuity. So continuity, again, with an LLC, this is much easier to do than really with a sole proprietorship, because within the business entity, transferring ownership of your interest to other partners, heirs, or other individuals is relatively straightforward. You will need a qualified lawyer to draft up this transfer of ownership, right? For a number of reasons, but it can be done. And not just that it can be done, it's done regularly, and lawyers throughout the country have experience doing this. At the end of the day, it's just a cost that you have to pay them to do it, and then you can transfer ownership or interest within partners. You can, buy out a partner, you can add a new partner, those types of things, transfer the LLC to your heirs. And before I start speaking out of my depth, just know that in an LLC, this is possible, and in a sole proprietorship, this is not possible, okay? So S corporations, that's the next one. And this is an LLC as well. S corporations are an LLC that elect to be treated as a corporation. And the difference, really, one caveat about the S corporations is that there's only one owner required to be an S corporation, okay? From a tax perspective, S corporations have similar tax implications, tax structure as partnership LLCs, multi-member LLCs, okay? Also, distributions from S corporations are not subject to taxation, just like LLCs, provided that you have sufficient basis in the company. That's what I was told by the CPA. I will let your CPA explain that. From a liability standpoint, S corporations have the same liability protection as multi-member LLCs. So again, this is the advantage. The advantage to having LLCs is that you have separation between your personal and your business, okay? S corps, same thing. You have that same protection, with the caveat, again, that you have the proper controls in place to keep business and personal separate, right? From a growth perspective, S corporations can bring on new shareholders very easily. S corporations can have up to 100 shareholders, giving you, access to all kinds of new growth opportunities, that kind of thing. Also, just like the LLC, S corps are able to take out business lines of credit, loans, get credit cards, all of those types of things. So all of those levers available to you in the multi-member LLC, also available to you in the S corporation. And from a continuity standpoint, as you would imagine, similar to LLC, it is simple to change an S corporation ownership. If a shareholder passes away or wants to exit, actually, I didn't know this, but when I interviewed the tax person, there's actually no tax consequence to the S corporation if a shareholder wants to exit the business or passes away. Also, S corporations are generally excluded from estate taxes. I don't know exactly how that works, but that sounds good to me, right? The reason being is that would help your future beneficiaries minimize their tax burden if and when you pass away and you leave them this S corporation. C corporations. C corporations are the most complex business structure of the four, and it has the ultimate liability protection, but it is also the most costly and the most complicated to manage. Okay. And we'll get into why in a second. From a tax perspective, C corporations are taxed at the entity level. Okay. So in other words, a C corporation is really like another person, right? Whereas the LLCs and the sole proprietors at the end of the day have some pass through back to your personal taxes. The C corporation is its own entity and there is no pass through. Okay. So what does that mean? That means in practice that every C corporation is subject to the federal corporate tax rate. Right now, as at the recording of this video, 2024, the corporate tax rate is 21%. So it doesn't matter how much you make in the C corp, 21% for sure going to taxes. Honestly, it's going to be probably more because each state has an additional tax rate for C corps, okay? And depending on which state or which states plural that you do business in, you will also have to pay those tax rates, okay? From a profit perspective, C corporations are double taxed, which again, so we talked about being taxed at the entity level, okay? So that's one set of taxes. Now, when you pay a dividend to yourself or someone else, those dividends are taxed again. So taxed 2 times, okay? And that is different than LLC because LLC, generally the distributions are not taxed. So a lot of red tape, a lot of taxes going on with the C corporation. Why do people do that? For a number of reasons, 2 main reasons, right? First, from a liability standpoint, a C corporation, as I mentioned earlier, is as if it's its own person. There is a complete distinction between corporate and personal assets. But just like in the other business structures, commingling of expenses is really bad. And particularly with C corporation, if you commingle corporate and personal spending, personal assets, there's a term called piercing the corporate veil. And if you do that, you are subject to a slew of consequences, a bunch. These are the things that you read about in the news, okay? So I think the point is that the great thing about a C corporation is it gives you complete distinction between corporate and personal, but you have to keep business and personal separate. You have to keep great records of this because you don't want to make the news, right? For piercing the corporate veil. So that's one key positive of the C Corp is that you have that complete separation. The other thing that you get from a growth perspective is that C corporations are the only business structure that allow you to raise capital through public offerings. In other words, a C corporation can go IPO. An S corporation or a multi-member LLC cannot go IPO, okay? And it's from a C corporation. I mean, this is really what you see in the stock market, right? It's easy for C corporations to raise capital in debt or equity, either borrowing money or, selling shares of their company. This happens all the time, daily with the stock market. A lot of you are probably invested in the stock market. You're invested in a C corporation, okay? And from a continuity standpoint, this is similar to an S corp in that shares are easily transferable to beneficiaries or new shareholders, right? And all taxes are paid within the corporation, which it is a benefit to estate planning if you were to, if you were to pass away and leave your C corporation to somebody else, right? But the two main drivers for why people do the C corporation and why I would recommend that to somebody is the complete encapsulation of the corporate entity and the liability protection that it provides you. And second, if you need to raise capital through a public offering, through selling shares, the C Corp is your only option, right? So there you have it. That's the 4 types of U.S. corporate business structures that are out there that are popular. There's a lot of nuance to it. Again, I can't emphasize this enough that you need to go out there and find a CPA and find a lawyer in your locale to recommend what would be best for you and your business and in your situation. But from my perspective, if you're looking to be an independent contractor, you're solo, you're just starting out, my recommendation, LLC. That's what you want to do. You want to get away from the sole proprietor as quickly as you can. Ideally, you would get away from the sole proprietor before you get into business, right? Before you take that first check, that first income, that first revenue, right? Sometimes you can't. Opportunity happens. You got to take opportunity when it comes. I get it. But ideally, you wrap all of that into an LLC. For most of the solopreneurs, the gig economy, independent contractors, that is going to be your best bet. C corporation, to me, it's a lot. To me, it's too much for a solopreneur unless you just have this product idea and you need funding right now and you need to get venture capital involved and all of those things. That's when you start with a C corp. But it's very complicated and it's mostly, I think it's going to be overkill for a lot of the people who are starting their business today. Okay. If you have any questions, this is dry sometimes and complicated, and I could talk about this for hours. I could have different CPAs and lawyers on here, and they could talk for days about this very topic. There's a lot of misinformation out there, so just be educated. Again, build your team, get your own people, ask them questions specific to you. But if there's anything else I can answer, please just hit me up in the comments. I'm happy to give you all of my background and why I chose what I chose, and whatever context I can give to you, I'm happy to do that. I think that it is one of the fundamental steps for you kicking off your business. You need to have your structure nailed, mainly from a liability standpoint. That's really the thing that I'm always afraid of. I go out and do a job. I don't want to get sued. If I do get sued, I only want them to be able to go after my corporate stuff, not any of my personal stuff, right? So lastly, thank you as always for listening to this. Please share with somebody who you think this might help. And if there's any questions or if you need any more information from me, let me know in the comments. I'm happy to answer them, and I will talk to you next time.